What if I told you you were 60 days away from $600 billion shock to the system and that every risk dollar could soon flood into the US markets, leaving you watching from the sidelines? Stay tuned, because in this video, we're breaking down Chamath's latest bombshell prediction and why this could be the moment crypto investors have been waiting for. Stay tuned.
Watching Bitcoin climb higher feels like watching a train leave without you, but it's not too late. At Drip2BTC, you can grow your Bitcoin like never before. Earn up to 3,000% APR on credit conversions and discounts on Bitcoin purchases. Step 1, buy Bitcoin. Step 2, deposit it. Step 3, let your wallet do the work. Don't miss this chance to change your life. Start today at Drip2BTC.com.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. So in today's video, I got a clip from Savvy Finance with Chamath Palihapitiya. I believe this was on the All In podcast, probably earlier this week or last week. But we're just going to play a short clip, and basically, I'm going to give you my take on the absolute worst case scenario and why, for me, in my humble opinion, that is actually still quite bullish. So let's listen to this clip and then break down what this actually means for crypto, specifically Bitcoin.
In the early 2000s, I think that there was a war of ideas, and that there was a group of people that advocated for this reckless form of free trade and this globalist view, like every country is going to meld into one mega monolith country organization that'll get governed out of New York by the United Nations and its sleeve organizations. And that worldview won, but it was the wrong worldview. And it didn't acknowledge that we have competing philosophies, competing priorities, competing ideals of what the future looks like. And I think that we need to go back and reset all of those things. If you just take where we are, if you can just put the Sankey diagram back up, there's a couple things that are really worth noting that people need to fundamentally understand. I said a couple of weeks ago that I thought the GDP print was going to come in hot. I think everybody now is sort of where I am.
Why is it hot? Do you have a thesis on why GDP spiked so much? Or potentially did. That's obviously a forecast.
I don't know the puts and takes yet. And I think when we see the print, I have a way of forecasting this stuff, which is a bunch of signals that my team, and also many macro teams all around the world, the bond vigilantes to the hedge fund guys, they all feed it to me. And what I was noticing was that we were going to come in, I said in the low threes. And I think, if Atlanta Fed is right, I don't think they are, but I think it's going to be in the low to mid threes. It's going to be meaningfully greater than what people are expecting. So let me just give you my next prediction. My next prediction are two really important things. What this Sankey diagram looks at, which is a snapshot of the balance sheet and the health of the United States in May, misses, in my opinion, two very important things that have to change. The first, and this is a positive for the Trump administration and the United States economy, is we are run rating $300 to $400 billion above forecast in terms of our receipts, meaning the revenues that we will take in. And you get to that number by looking at the last 3 months of tariffs and forecasting forward, assuming a reasonable balance here. So back to Tucker's point.
So just that first piece right there that he's talking about is saying that basically everything is pointing towards things being better than they may seem right now. So based off of what Trump has done with the tariffs, and that's still in effect with China, and I believe some of the other countries still have time to finalize some deals. But basically, because of that and some of the cuts that Doge made, there will be 300 to whatever he said, 400 billion or 300 to 600 billion by the end of the year surplus. So that doesn't put a huge dent in the debt that we have, but that is money that the government doesn't have to spend. So that's money that gets put back onto the books that could turn around to be some sort of injection. Remember, there was the discussion of the tax savings and doing stimulus checks from the Doge cuts. Don't know if that's still on the table, but the point is that there's money out there and that could roll back into the economy. Because remember, again, we're going to be coming up on the midterms, and the best way to guarantee your position, or at least get votes on your side, is to make people feel like they're in a better position. And one way to do that is open up the money printer, right? So right now, and he's going to talk about that, Powell's not on his side, but there are other options that they can use to turn that on. And if you remember back in 2020 when we had that spike, there were stimulus checks pumped into the markets due to COVID. Not going to say it's that size, but they do have options basically. So that's bullish take number one.
Right. Yeah. We all thought that this was like a boogeyman, that you weren't allowed to touch it, and that if you touched the stove, you were going to get burned. The mathematical reality is that this is actually going to work out much better for us than we anticipated, and it's going to be somewhere in the range of $300 to $400 billion of extra revenue per year. That's a huge win. So why is that important? That then sets up this next cataclysmic thing that we're going to see over the next 60 days, which is, what does Jerome Powell do? If Jerome Powell stays politicized, his incentive will be to keep interest rates where they are. If Jerome Powell looks at the conditions on the ground, especially when you start to see inflation stay in the low twos and approach 2.0, the real thing that he's going to be under tremendous pressure to justify is, why are you not cutting? And just to give you a sense of how important that is, if we cut by 100 basis points, that's another $300 billion. Now, in that case, that's not money that we get in, but it's money we don't have to spend. So if you add these two things together, we are in the next 60 days going to have to reforecast the American balance sheet where this is, or we're actually going to be able to positively forecast an extra 600 billion, 300 billion of incremental revenue and 300 billion of savings. Jason, if that happens, watch out. What does that mean, watch out? It means that every single risk dollar is going to run to America. Every single one.
Yum, yum.
Forget Japan, forget Europe. There is no place to put your money except the United States. So I think that we have to figure out how to get Jerome Powell on the side of America versus on the side of what could happen politically. Because I think that there's probably a version in his head that says, my gosh, if I do this, it helps Trump. And if I don't do it, it hurts Trump. Practically, that is true. But the reality is,
So that's the other bullish catalyst. And for me, going with the absolute worst case scenario is, since we know that Powell and Trump are not on the best of terms, and it could be that Powell decides not to cut rates because of what Chamath just said. It helps Trump. But either way, he's coming out come next year. And let's just say worst case scenario, he doesn't, and he keeps rates exactly where they are. We've already seen Bitcoin's resilient. Despite what's going on right now in the news, war and all sorts of other negative environmental factors, especially in the Middle East, Bitcoin has maintained above 100K for 45 days in a row. So we have not come back down. We're close to it right now at 103 and some change, but still, that shows Bitcoin's resilience. Even before we had this break all the way down to 101 back in June. I forgot what the news catalyst was for that, but right now we're dealing with this fallout going on with Iran and Israel, and Bitcoin's still holding above what it was on June 5th. So that is impressive. So that to me spells positive momentum. So going back to what I said, if Powell decides he doesn't want to cut rates, the market has already factored in the idea that he's not going to cut rates, and Bitcoin is showing resilience. So I feel like that could actually be bullish, and Bitcoin can just chop sideways here and just get tighter and tighter wound in consolidating this 100 to 110 range. And that would be awesome for stacking sats, because we know that the longer any kind of chart consolidates in a compressed range, then the bigger the breakout. And of course, it can break out higher or lower. But with Bitcoin, I believe, of course, it's going to break out much higher. So to me, that is a bullish sign. I know everybody else probably wants to see Bitcoin take off to the moon, but I believe that if we get that worst case scenario of Powell not cutting at all, then this would just consolidate all the way through to the end of the year. But there's still, I don't have Raoul Powell's tweet up because it was just basically about what Chamath was saying, but there's still the M2 and all sorts of other stuff that comes into play where Bitcoin could still slowly climb an inch higher. So we flip on the other side, the bullish take, and there's this money that Chamath is talking about. So as he said, if you cut 100 basis points on the current rate, this is inflation rate, CPI, but if you cut 100 basis points, he said it's like 300 billion. So there could be significant windfall catalysts, and that's when the money printer really comes on if the Fed actually cuts rates. So I'm saying just evaluate this with the worst case scenario that Powell doesn't. We got war, literally missiles being shot, and Bitcoin is still topping above 100K. So to me, that's bullish. Not saying war is bullish, but Bitcoin is showing its resilience and decoupling from everything else. Even with what I saw, like a bunch of shorts getting or longs getting liquidated on crypto. So positive take in my humble opinion. Let me know what you guys think, where you're at, what you're speculating. I believe the last video I saw from Arthur Hayes, he's still saying 250 for Bitcoin. I think even Raoul saying the same thing by the end of the year. So that just means that whenever Bitcoin does decide to break out, it's going to be violent, because we're already at halfway through the year, and any more postponing. So Chamath said the next 60 days. So this could take us all the way out into August. We'll see. But for me, nothing changes. Just continue dollar cost averaging, staying humble, stacking sats, and not getting out over your skis with leverage. And I believe this year will end higher than we are now. I don't know if the 250K mark is on the table, but I do believe that for this cycle, 100K is the low. That's just my personal opinion. I don't think we're going to break below that, even in next year's bear market or the following year's bear market, whenever that comes into play. All right, let me know what you guys think. Drop your comments down below. Smash that HPO special. Help a brother out. Lift daily and achieve your impossible. See ya.